All right, so today I did the following earning trades: Apple, Amazon, EA, Electronic Arts, Facebook, and Google. Now they're all announcing earnings after hours today, so it's actually 4:24. So if you look at them, get a good idea if they're winners or not. Now I went with the put spread, a vertical put, basically because I find that it is the trade that usually gives me the best chance of winning. It's safer, it's less stressful. It gives me room to be wrong. So if the stock drops after earnings, I have time to recover. I have until August 21st. I picked the August 21st expiration. Plus, I have room to be wrong. It could still drop and I could still win. But at the same time, it gives me a chance to win in case the stock moves up after earnings or even stays flat. Usually there's a bit of volatility crush after earnings because earnings is announced, so the premiums that I collected will usually drop and the trade can become a winner very quickly. So to explain the Apple put spread, here's a little illustration. So I sold the August 21st 355 350 put spread. So I sold the 355 put option and I bought the 350 put option, and for that I collected something. I collected a credit of 80 cents or 81 cents. So now that means for me to win, for me to keep that 81 cents, Apple needs to stay above 355 come August 21st. Now I'm not going to wait till August 21st if I don't have to. After I did this trade when Apple was trading at 385. Now after earnings, if Apple goes up, what tends to happen is that 81 cent spread is going to be worth less, maybe 30 cents, 20 cents, so I can buy it back and close the trade the next day instead of waiting until August 21st. But I'm giving myself room to be wrong. If Apple drops, it could still drop to 355 and I could still win, but I wouldn't win the next day. I would have to wait till August 21st for this trade to become a winner. If Apple goes below 350, so completely breaches my short strike, then what I could do is I could start selling a call spread. Maybe start selling a call spread at around 375, 370, maybe even at 355. So right now, without doing anything, without selling a call spread, my max loss is basically the difference between two strikes minus the credit that I received of 80 cents. So my max loss is $4.20 times 100. I did one contract, so $420. That's if I don't do anything. But if Apple drops below 350, I'm going to sell a call spread right away at maybe 355. And I'm going to probably collect $3, $2.50, depending on how much time is left on the trade and depending on how far down Apple drops. So that way I'm actually minimizing my max loss. Instead of losing $4.20, I could lose maybe $2 or $1.50. But that's really in the case where Apple drops below 355. But there's many different scenarios. Apple can go up, can stay flat, can drop a little bit, can drop to 355, but then eventually comes back up. So there's a chance that Apple drops below 350, but it's one of many scenarios. Ideally, Apple goes up after earnings and I can close the trade the next day. So for example, if I go back to Questrade right now, let's look, because it is after hours right now, it's 4:32. We could see that Apple is flying right now to 4:05. So that means this trade, there's a good chance that tomorrow I'll be able to close it right away. I don't have to hold on to it till August 21st. I think I collected 81 cents, I said. Yeah, so it's probably, maybe if I can close it for 20 cents, that would be good. I'll try to close it for 20 cents. Now, of course, I'm looking at it at 46. I mean, I wish I chose a higher strike, maybe a 360 put or a 365 to collect more premium. But whatever, that's the strike that I chose. And how do I choose my strike? Well, basically, if I choose the expiration of August 21st, what I do is I go look at the expected move of the stock at that expiration. So the expected move, I can get it by looking at the straddle and then looking at the expiration. And right now it's not showing, but when Apple was at 385, the straddle was at about 30 points. So 385 minus 30 is 355. So that's why I went with a 355 short strike. So basically my strike is at the expected move. And what that means is, as long as it stays above 355, I win. If it goes below 350, that put option that I'm buying here, that's my protection. In case Apple drops to 300, my max loss is capped at the difference between both strikes. But I'm also capping my profit or minimizing my profit because I'm buying a put option. But it's less stressful when your losses are more controlled and not unknown or undefined. This way, you know what your max loss is. It's less scary, less stressful, in my opinion. At expiration, for example, if Apple is trading at 340, this 350 put option is going to be worth $10 and this 355 put option is going to be worth $15. But this one I'm gonna have to buy back because it's a put option that I sold. This one I can sell because it's a put option that I bought. So the difference is $5. So the difference will always be $5 regardless where Apple is trading at below 350. But luckily Apple went up, so this is going to be a winning trade. So it's the same concept. Did the same thing with Amazon. I looked at the expected move for August 21st and I chose that short strike of 28.05 and I bought the put option of 2800. So there's a 5-point wide. So it's a 5-point wide spread. And I collected, I don't remember how much I collected. Let's go see Amazon. I collected $1.09, not bad. And let's go see if it's a winner or not. Let's look at create order. Amazon jumped up to 32.03. So that's going to be a winner as well tomorrow. So hopefully I can close it for something decent. At least less than 50 cents. I'll be happy if I can close it or buy it back for less than 50 cents. But it's the same concept. So instead of having 355 and 350 here, it'll be 28.05 and 2800, while the stock was trading at about 30.70 when I placed this trade on. Now Amazon, I don't know if you watched my video on Sunday, but I was thinking of selling a naked call on Amazon all week, and I actually had high hopes to sell a naked call on Amazon, and I was going to go to a 3700 strike, so very, very far. Now a naked call, the loss is unlimited. In theory, it's undefined. You could lose, if Amazon goes to 4,000, you would lose 4,000 minus 3,700 times the number of contracts you did. So really it's scary to do a naked call, but they usually have a better chance of winning because you can go further. I mean, what are the chances that Amazon goes up 22%? It did it once back when it was trading at $70, but right now it's a $3,000 stock. It's a $1 trillion market cap. So it's hard for that big of a stock to move 22%. Still possible. Anything's possible, but just more unlikely. So at the beginning of the week, the 3700 call was trading at around $7. So I was definitely going to sell it. So that's $700 if I do one contract, with a really good chance of winning, because really hard for Amazon to go from 3,000 to 3,700 after earnings. But now the 3,700 was only trading at this morning was trading at $1, and before the close, as you can see, it's trading for 45 cents. So that would be $45. Yes, it would be a very easy $45, but I don't think it was worth going with a naked position for only $45. So I didn't take it. And so instead I went with a put spread on the other side, but not a naked put, of course. I went with a put spread. If it was a naked put, it would require so much more capital. And once again, I think any trade you take, you need to have a plan in case things go wrong. So with naked positions, I don't have a plan in things if things go wrong. People say you could roll them, but I don't like rolling because it just becomes harder to manage and more of a headache, and you don't know what next week is going to bring. So I don't like rolling. So I think a naked position, if I have to manage it, if it goes against me, I think I would just close it for a loss. So it's not something I can I don't think it's something I can handle. So that's why I decided to go with a put spread. And why a put spread and not a call spread? Just because if the stock drops, the premiums of the stock will go up. So if I sell a call spread on a stock that has dropped, I'll get more from the call spread. But if I sell a call spread to begin with and then the stock goes up, and then I sell a put spread to mitigate or to reduce max loss, I'm not going to get a lot from the put spread, because when the stock goes up, the value of the premiums go down. So I wouldn't be getting much out of the put. So that's why I prefer selling puts, because the hedging trade is going to have more value in it. I also did EA Sports, or Electronic Arts, 129, 124 strike, same concept. I looked at the expected move and I chose that short strike, and let's see what happened with Electronic Arts. I don't know if it's announcing today or tomorrow before open. It says July 30th, so I think it's announcing today. Let's see what happened. It closed at 138.5 and extended hour 139. So I think it just didn't announce yet. So we'll find that out later. Let's look at Facebook. Went with a 215 strike and it's at 248. Everything's going up. I find selling puts is so easy because the stock market generally goes up. This is ridiculous. All right. Anyway, so this looks like a winner as well. We'll find out tomorrow how much. How much did I collect off Facebook? I think I collected like 80 cents or something. Facebook, 95 cents. Not bad. So, and now the final one, Google. Yeah, Google, I'm always afraid of Google. Always drops for some reason. 1531, so that's good. I don't know if it went up though after hours, or if it didn't announce yet. Let's see if it announced, Google. 1538, 1531. Yeah, I'm not sure if it announced yet. Anyways, we'll find out tomorrow. But these were my earning trades for today. 5 of them. And if you have any questions on how the put spread works, I hope I explained it well. But if you have any questions, leave them in the comment section below. And if you're going to open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades regardless of your deposit. And if you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.